There's central bank meetings galore this week. Already the RBA have surprised the markets by slashing their benchmark rate. I've been speaking to Jeremy Cook about how these meetings will shake up the FX rates. So there's plenty of central bank decisions this week. Let's start with the Bank of England. Obviously we saw big actions by the Fed and also the ECB. The BOE will probably follow suit sometime, but do you think it'll be this time?
No, I don't think it happens this month. I think we'll wait until November. We're halfway through a £50 billion quantitative easing programme at the moment. I think they wait and see and then, as I said, go again, probably to the tune of 50 billion again in November. We did have a couple of voices in the previous minutes suggesting that we should increase it sooner rather than later, but I think they'll hold off on that. Inflation pressures are still pretty muted here in the UK, but we have seen oil prices rise and they seem to be fairly happy to be able to sit there and wait for external pressures to do what they do. We may not see a rate cut anytime soon, but further QE definitely in November.
And what about the prospects for the sterling? Do you see much more upside potential there?
I think certainly there's sterling upside versus the US dollar, but that's mainly due to what the Fed is doing as opposed to what the Bank of England's doing. The UK QE is pretty much sterling negative because you have this expansionist monetary policy and a tightening fiscal policy. They kind of counteract each other, I would say.
Obviously, Draghi's made his big move. There's going to be no action probably tomorrow, but what do you think investors are going to be looking in the press conference which follows?
All about Spain. It's all about Spain. Certainly all the market movements since the launch of the OMT program has been about Spain. So we'll be looking to see if he comments or if he's asked in the press conference about the budget last week from Spain, the bank audit. To be honest, he's not going to say too much. He's going to say that the reforms will help. He will say that they're still going over exactly the figures of the budget, but he will also re-emphasise that Spain cannot do it on their own. That's why the ECB is there, but the ECB cannot do it on their own because it needs the Spanish politicians to enact austerity, apply for a bailout, that kind of thing. So it's more of a health check on the Spanish economy than any new policy, certainly tomorrow.
Once Spain asks that bailout, are you expecting a big bump in the euro?
Definitely. It's probably the biggest euro positive move that we would see over the course of Q4. So it may not happen for 2 or 3 weeks. We've got the Galician elections. We've got other elections in the Basque Country as well. So the Spanish government may be able or may want to see if they can pass that without the bond yields starting to rally up to 6 or 7% again. But certainly I think we see it over the course of Q4, and we see euro dollar back up into the 130s and euro sterling maybe as high as 0.82 on the back of it.
So euro dollar, do you think it can stay consistently above 130 and act in that range?
If we see a bailout, yes. But the longer we go without it, the bigger the uncertainty, then the closer we'll get to 125 in the meantime.
Okay, Bank of Japan, again, not a great deal expected, but the yen has been strengthening. It's moved back above 78 now versus the dollar. Are you on intervention watch at the moment?
I think we have to be, but not at these prices. As soon as we get down to the early 77s, the late 76s, then obviously the sirens will start wearing. We saw the cabinet reshuffle at the beginning of the week. We're still not sure what his kind of interventionist policies will be. The Sino-Japanese tensions are still kicking off at the moment. So expect maybe no policy out of the bank, or certainly no policy out of the Bank of Japan, but maybe caveats around that. We heard from Toyota and some of the major exporters last week that they were starting to shut down production, so they may say that's obviously going to wear on GDP going forward. But as far as intervention, are these price levels? No.
The Aussie dollar is pretty interesting at the moment. The RBA surprised most people earlier this week by cutting rates, but still the fundamentals remain pretty strong in Australia. So how would you read the Australian dollar at the moment?
We thought a rate cut was coming soon. We didn't think it was coming when it did. So the fact that the market had pretty much priced in a rate cut within the next meeting or two meant that Aussie dollar fell from kind of 104 territory down to 103 as opposed to falling to 102 instantly, like a lift with its cord cut. So it's the shifting of the schedule is probably the main thing. I mean, obviously the pressures are fairly obvious. China slowed down, mining resource slowed down. Inflation seems to be okay in Australia at the moment, so they're fairly happy with it to cut rates. We still think we see maybe 2 or 3 rate cuts over the course of the next 6 or 7 months in Australia. That will weaken Aussie dollar, obviously on a fundamental basis. But if that's happening, we expect to see China stimulus as well. So there's always going to be a floor enacted in that, just from the risk profile and people getting into the Aussie for the carry.
Overall, considering the problems in the Eurozone, elections in the US, also concerns about China, where do you think we are in terms of risk sentiment? Do you think investors are looking for more risk at the moment in the currency market?
I think they will do as soon as a couple of questions are answered. I don't think the US presidential election is a big thing. The biggest US thing is the fiscal cliff thing coming up at the end of the year. So once we start to get more people talking about it, certainly hearing more out of Washington about it, that will enable people to buy risk. Spanish bailout, and the biggest macro data, probably Q3 GDP out of China. We start to see that anything below 7.5%, people are going to get short risk very, very quickly, because they're going to be worried about the Chinese engine really, really slowing down. If it's above 7.5, 7.8%, I think people will be buying up risk, and euro-dollar will be pushing back above 130 very, very quickly.
Jeremy Cook there from World First Foreign Exchange. Stay tuned to Dukescopy TV for more quality interviews, but for now, goodbye.